Hey everybody, welcome to this week's weekly wrap. This is Markets for Millennials, and we're going to take a look at, in this video, the DXY. We'll take a look at yields, we'll take a look at all the equity markets, gold, silver, Bitcoin, and maybe we'll take a look at oil as well. Let's start off with the DXY. As we pull back, let's remember that ever since the crisis, had a dollar sell-off, and then dollar milkshake, and then a long downtrend. We've kind of had this little counter trend move ever since the beginning of 2021. We popped above a pretty important support level here at 92,171, but we have since come down below. And you can see here on my daily chart, we are below a long-term trend line, which is part of a channel. You can see I have some darker lines that are demonstrating different parts of this channel, all cloned trend lines. So you can see that we kind of popped back in, we popped below it at the end in November and December of 2020, bounced around a little bit, popped back above at the end of February, beginning of March, and then have now come back below. So the question is this the sign that the dollar is going to be resuming downward? One thing you have to remember is, as I've said before in these videos, that the DXY is an index of weight of the dollar versus other currencies, and about 50% of the dollar in the DXY is weighted towards the euro. And so the euro US dollar trade is informing most of what the DXY, or a good portion of what the DXY is showing us. So you have to take that into account. And it's also true that even though the dollar is losing its purchasing power, it doesn't mean that the DXY is also going to be falling. So that's something important to remember. And just because the dollar is increasing in value, or the DXY is increasing in value over the last few months, doesn't mean that yields are going to go up, or on the converse, just because yields are going up doesn't mean the dollar is going up. And so if we look over here at yields, we can see that ever since the beginning of August, yields have been slowly increasing. And then here at the beginning of the year 2021, their rise steepened a little bit. And in that, let me go back. In that same time frame, obviously, since August, beginning of August, the DXY was sideways and then down and then sideways and now up a little bit. But still, if you go back to the very beginning, we're not too far off from where yields started to rise in terms of the dollar index. So it doesn't always correlate. It doesn't always, follow. Here we are on the yields. We have kind of pulled back a little bit. Could this be, a bull flag? Possibly. I don't think so. That bottom trend line doesn't seem to fit too well for me. But it's possible we could have this little bull flag. We might be consolidating sideways before resuming up. I don't really know where it's going to go. It seemed like the market was pricing in higher yields, and then, kind of when we got close to the when we followed up the FOMC meetings after the quick rise, kind of has tapered off since then. I think the market was expecting the Fed to do something different than jawboning. So it doesn't look like, right now at least, that yields are showing their hand at all. You can also see this blue line. This is a long-term trend line. I'm sorry about all these lines, which is, let me go to a weekly chart. Shows a little bit better. We've been kind of in this channel. We've got a channel where we've got this upper band trend line, which is the one that you saw, and then the lower band, I'll darken this a little bit so you can see it, right? So it's a pretty clear channel, and I've cloned a bunch of trend lines of those trend lines, and it's bounced off around a bunch of those trend lines. So let's I don't know what happened to my chart here. Let me get back over to where we are. So it's not clear. I think until we can get, until we can close at least a week or two above this descending trend line, I don't see right now that it's very clear which direction yields are going to go. think a lot of people are expecting yields to go up, and that kind of makes me nervous as far as that trade goes. So we'll see what happens. We're above this 1.49 or 1.5 support line. We've been kind of, we're basically sideways ever since we broke through that resistance in the end of February. So here we are at a month and a half later. We're exactly in the same place as we used to be. So that's something to think about. And I'm going to, instead of going to equity markets, actually I will go to equity markets. Let's start with the S&P. You can kind of see the S&P broke above its resistance. It's been in the 4,000 land for a couple of days now, actually about 2 weeks now. And it's just a little too hot for me. I mean, the last time we had this kind of a rise, if you look at a couple of places, we had here at the end of May and into the beginning of June, we had a rise like that. At the end of July and into August and September, we had a rise like that. And I think that the rise here in late September and into October, and then late October into November, I think those are mean reversions. I could be wrong. They are, this first one came right back and retested, and then it just went up from there. So, but the point is to show you that every time we see a rise like that, there's a correction that follows. So I'm not looking to get involved on the S&P right now. I'm not going to chase momentum. The NASDAQ just broke above its previous all-time high resistance. And so it's going to be looking to retest that over the next few days starting on Monday. And so we'll see if that holds. NASDAQ looks a little bit better as far as something that I might want to get involved in if I was interested in taking the equity markets right now. If we look at the Dow, I feel the same with the Dow as I do with the S&P. I'm not interested in chasing the momentum up to the upside. Since we are now 2 weeks in above this resistance at 33,100. So I'm not interested there. What's interesting to me, though, is the Russell is not joining in. I mean, every other index over the last 2 weeks has made a new all-time high. Obviously, the S&P and the Dow are racing above their old previous all-time high. The NASDAQ just making an all-time high and retesting that. The Russell's not joining in. So should that be concerning? The Russell is a far broader index with small caps, and it's probably a better measure of the actual economy in the U.S. So it's a little bit concerning that we didn't even make a higher high from last week, the beginning of last week. So that's concerning. So we've made consecutive lower highs, although we've also made higher lows. So maybe we've got a little triangle pattern here, and we'll see what happens. We could go to the upside, to the downside. If all of the other indices are going up, then I would suppose that the Russell is going to go up as well. So what I'm looking for here is actually for it to get above 2315, retest, and then resume off before I'm thinking of getting involved in the Russell. Not financial advice, not investment advice. Let's take a quick look at gold and silver. I'll start with the gold to silver ratio. You see here that I had this in one of my videos recently. I showed this kind of bear flag. We popped below this lower support line and retested it, resumed down, and then it looks like we came up for another retest. So it's interesting today that gold outperformed silver. And I talked about this in my last video from earlier this week, that it's interesting to me that gold is bid. And in this case today, outperforming silver. In a bull market in precious metals, usually silver will outperform gold. And I suspected that there might have been something to do with, the international news regarding Taiwan, recognizing Taiwan and focusing on, democracy in Taiwan, promoting that. Biden's announcement to get out of Afghanistan, to pull the troops out of Afghanistan, and among other things. and sanctioning Russia also. That was another news event talking about sanctioning Russia. And I wonder if this, because we were bouncing and it looked like we were losing steam on our bounce, kind of like at the end of, kind of in the middle to the end of March. And then all of a sudden we were bid. And, you saw a pretty big sell down in yields, but yields were up today compared to yesterday. Not much, but up a little bit. And gold still had a pretty huge rise, breaking above. You saw me lightening that trend line just a minute ago. It's above a level on this descending channel trend line that I think is pretty important. We got a daily close above it. So what I'm looking for now on gold, I want to hold out judgment for maybe another week or two to kind of see what the price action does, because maybe this is going to be a failed breakout and we'll drop back below this trend line back into the channel and might even fall below this horizontal support and continue lower. Or, it's entirely possible that we continue the momentum to the upside. If we can get above 1795, retest it, and resume up, then I think it's open season for gold. And I think that if that happens, then our gold to silver ratio will continue downward, because if that were to happen, if the technical break to the upside happens, then that means that silver is going to fly. And I think if that happens, then you'll see silver come above 26.36. And it's got a couple other areas of horizontal resistance to get above, but I think that this is the level that you're looking at trying to get above with silver, and then it'll be open season. So for me, I'm going to wait on the sidelines for gold and silver for the time being, for maybe another week, until I see what the price action does. We'll see what happens with yields. We'll see what happens with the dollar over the next week or two. Going to Bitcoin, and I think we'll just stop after Bitcoin. This week we reached a new all-time high on April 14th, but then we fell back down. And I just think that it's kind of interesting to see what's going on. It's not abnormal to see price break the all-time high, retest, and then resume off. You notice we haven't had a daily close yet below the old all-time high. So that's a good sign. We've wicked down a few times. I think some people were taking profits. I mean, imagine taking profits at this point in the Bitcoin bull market. But anyway, so where we closed today, obviously the Bitcoin market, crypto markets are open 24/7, 7 days a week, right? 24 hours a day, 7 days a week. So we'll see where this closes in a few hours, but it's a good sign that it is closing above our support at 61,193, and even above the wicks on the all-time high over here. You can see over here on the left side, it's even right now above those wicks, so that's good. But like I said, it's not abnormal for Bitcoin reaching a new all-time high to come back down and retest. You see it over here at the beginning of February. You see it over here at the, in the middle of March. And just because these new all-time highs consolidated back down below in both cases, it doesn't mean anything. The point is that whenever you get a rise to a new all-time high, usually you get some kind of retest. You can see it here. If we go back, right, you can see it here. And it's the case also in previous cycles. So I wouldn't be too concerned about Bitcoin. If you're holding Bitcoin, just hold on for the ride until until we get to at least until probably late July, August, and into September. Price action will tell us what we need to do. Don't be too married to your models. Just watch for price. I've moved my buy zone. Well, actually, I haven't moved the buy zone yet. I'm waiting to move that until I know what's going on up here. I'm just moving this a little bit so you can see. I've got this red box, which is where I'm targeting somewhere in this vicinity to be the next major pullback. It's a pretty wide range. I think at the least, it's going to get to at least 75,500 before any potential for a pullback, and maybe at most could even get into the triple or into the 6 digits. We'll see. A lot of upside, obviously. The risk is to the upside, so you don't want to be, waiting. This is actually probably a really good time. Most people get concerned. Most people are afraid to buy when it's been on a dip, but that's when you should buy. You don't want to wait until you're chasing momentum. That's not the right time to buy. So, not financial advice, not investment advice. Anyway, that's a look at the markets. It'll be interesting to see over the next week what happens with the DXY, if we are in fact resuming down, or if this is just a momentary pullback before heading on upward. So thank you for watching. Please make sure to like and subscribe and share this if it was helpful and if you think somebody else will benefit from it. Thank you. I'll see you guys next time.